Hello everybody, this is Daddy here. Hope you are well. Today, let's look at how to measure volatility using ATR. ATR means average true range, okay? So, few things we are going to touch on today. First of all, we're going to measure the volatility. How do we measure it? We're going to talk about risk of volatility, average true range, how to use the ATR, using ATR as a volatility filter, and using ATR for risk management, okay? So how do you measure the volatility? What is volatility actually? It's the measurement of price variation over a specific period of time. So depending on your time frame, 5 minutes, 1 hour, daily, weekly, whatever your time frame is, the movement of price within that period is called volatility. How fast does it move within that period of time? That is volatility. So when we discuss volatility, we use an indicator called ATR. I'll soon show you what it looks like. But let's look at risk of volatility. Is it good? Is it bad? There are two schools of thought, okay? Some people like high volatility. What it means is larger price movement, okay? And what does that mean? Larger price movement means more potential opportunity. But also remember, there's a possible risk with larger movement, right? So what else do we know, okay? Average true range, so we can measure it over a specific period of time, okay? How do we know what is a range for a particular specific period of time? Okay, there are 3 ways to do it. First way is that for that period of time, you can look at the high of that current period less the low of that current period. Let's take, for example, daily chart to make it simple. So you are looking at the high of today minus the low of today. That will give you the ATR for right now. Or if you are looking for the ATR of yesterday, it will be high of yesterday minus the low of yesterday. That's ATR for yesterday. That's one method of doing it. Second way of doing it is you need to look at the high of the current period less the previous period closing price. So that is high of today minus closing of yesterday. That's another way of doing it. The third way is to find the low of today minus the previous closing value, which was yesterday. So these 3 methods, you are going to use these 3 methods to find which of them has the biggest value. It could be in a negative or positive, but you want to see absolute true range, that is absolute value, regardless of the sign, whether plus or minus, but you want to see the biggest value. That will be the true range for that period, okay? All right, take for example, let's look at this chart. Okay, this is a pound-dollar chart. You can see the average true range chart of a 14 period. You can see, this area, we say the volatility is very low, all right? It roses here, it rose here, it fell here, that is, and it was going up here until it shoot up here. Who knows what happened here? Who knows? We don't know. We will see. So now you see the volatility drops again. So when you see the high volatility around here, it means ATR number will go up and the price itself, the range of the price for that day or for that period will be very, very high, okay? So now let's look at how to use it. So you have 2 ways of using ATR. The first way is as a volatility filter, and the second way is to measure risk. So you can use it as a filter or to measure risk. Let's first of all check how to use it as a filter. So as a filter, what you are looking for is a low volatility environment to continue, or you want the low volatility environment to change. So 2 things. So if you are looking for it to continue, it means you want to trade in a range. That's your range band trader. If you're looking for the low volatility to stop and for high volatility to start, that is, you are a breakout trader, okay? So you can be in either of the camp, or you can be in the 2 camps. So if you are a range trader, what you are looking for is you have a luxury actually to define your support and resistance levels, because price will bounce off your resistance and support level, and they will respect them, right? But for the breakout, you don't want a range. You want price to actually break those barriers. You want them to break those boundaries, break the support, break the resistance area, so that you can make your own profit, okay? And while breakout can potentially lead to huge moves, the probability of success is significantly lower. So you see people trading breakout, there may be a lot of false breakouts, but they compensate for that for one big move. Okay, so that means sometimes you have to, find the balance between trading for a lot of trades where you have a lot of false breakouts, and equaling it with one big move. So you have to capture the big move all the time. So let's look at the second way of using ATR as a risk management. Okay, so one of the struggles a new trader has is how to set their stop loss, but this ATR will help you to solve that problem. So ATR, as we said, is based on price movement in market. Okay, so the indicator also expands. As the price expands, the indicator also expands. So it will help you to put a bigger stop loss or a smaller stop loss depending on the price volatility. So it helps you to actually determine your stop loss. Okay, so you can use ATR. For example, some people will use 1 multiplied by ATR, 2 multiplied by ATR, half of ATR, whatever you want to use it for is great. So ATR is used for different purposes. Now let me show you example of an ATR here. This is pound dollar. This is pound dollar. Okay, so you can see sometimes the ATR goes up, sometimes the ATRs come down. Look at that, ATR is rising here. It means price volatility is very, very high. All right, let me give you a specific example that I noticed around about 2016. The one I showed you already. I want to go back there. Yes, so I color this one so that I can show you. All right, so this is 2016. I asked you a question earlier that, do you know what happened here? Let me put a date there for you. So this is around 2016. Well, I think if you remember what is called Brexit, that time, that was around that time when pound actually dropped heavily. Within a few days, actually within a day, it dropped over 2,000 pips. Okay, over 2,000 pips in one day, or run about for the whole week or thereabout, because this is a daily chart. So you can see the ATR also rose. So this is ATR. In fact, if I need to quickly show you, I think most of you knows about it already, but I'm going to show you the indicator. So if I go to here, let me look for that indicator ATR. You can see what it's all about. It's just period of 14. There's nothing else to set. That's a period of 14, any color you want. So that is, let's see another area. You can see we have a high volatility here. It helps you to determine what your stop loss will be. Okay, this is another big move here. All right, this year is, when is this? This is 2020. Who knows what happened here? So when pound actually dropped again by what? By nearly 1,800 pips. Okay, in a few days. Do you know what that was? I think that was coronavirus. That was when the number of casualties in the UK number was so high, and they discovered a new variant in last 2020. You can see the ATR will respond very, very quickly to the movement in price. So guys, I hope you understand this lesson. You can use it in your trading. The ATR is available on MT4. If you want me to send one to you, let me know. But of course, it's available, right? I'll put a link in the description if you want to download it. So thank you for watching, right? If you like this lesson, like this lecture, give us a thumbs up, and do not forget to subscribe and click the notification bell. Thanks for watching. It's Dari.